thanks for tuning in to this week's news recap. Thanks, FOMC. Crypto is tanking because of you, probably. On Sunday afternoon, the total crypto market dipped to lows not seen since September 2021. Bitcoin led the way, dropping below $40,000 for the first time in roughly 3.5 months. Overall, the crypto industry's market cap hit a weekly low of $1.86 trillion on Sunday, before bouncing up to above $2 trillion for the rest of the week. According to data from CoinGlass, the market drop saw over $300 million worth of positions liquidated on the 9th, which is the third time this has occurred in 2022. The dip coincides with big-time money flowing out of digital asset investment products. CoinShares notes that digital asset investment products experienced the largest outflow of money on record for the week ending January 7th. Bitcoin and Ethereum-based products were hit especially hard, losing $107 million and $39 million respectively. The CoinShares data shows 4 consecutive weeks of outflows, which has not happened since September. The firm points to last week's Federal Open Market Committee meeting as the catalyst for the market drop, which hinted at inflation risks and the possibility of interest rate increases, a take that Hasib Qureshi, partner at Dragonfly Capital, agreed with on the chopping block. Bitcoin developers are now protected by Jack Dorsey. Block CEO and avid Bitcoiner Jack Dorsey announced plans via email to set up the Bitcoin Legal Defense Fund, a nonprofit organization aiming to protect Bitcoin developers from legal pressures. Dorsey wrote, "The Bitcoin Legal Defense Fund is a nonprofit entity that aims to minimize legal headaches that discourage software developers from actively developing Bitcoin and related products, such as the Lightning Network, Bitcoin privacy protocols, and the like." According to Dorsey, the fund's first goal is to coordinate and organize defense for Bitcoin developers in a lawsuit coming from Tulip Trading Limited, a company associated with Craig Wright, who claims to be Satoshi Nakamoto and was a leader in the Bitcoin Cash and Bitcoin Satoshi's vision forks. Dorsey makes it clear that the board, which includes himself, Chaincode Labs' Alex Morkos, and Martin White, an academic at the University of Sussex, is not seeking additional money for operations, but may in the future. Cash App is rolling out Lightning Network integrations. Cash App, the block-owned payments platform, has begun integrating Lightning Network into its iOS mobile app. Lightning Network is a Bitcoin scaling solution that allows users to transact cheaply and efficiently without settling each transaction on-chain. Lightning has grown from holding just over 1,000 BTC to 3,344 BTC in the last year, which means roughly $150 million in Bitcoin is locked in the Lightning Network. While that growth is impressive, Cash App may bring an even further stampede of Bitcoin to the Layer 2 solution, as data shows that Cash App ranks as the 14th most popular app in Apple's US App Store. Furthermore, in a recent report, the company noted that over 40 million users transact on its platform each month. Lightning Network should also receive a boost in activity from Strike, a Lightning-based company led by Jack Mallers. Strike announced that its Lightning Network-enabled app is extending its reach to Argentina. Expanding a Bitcoin/Lightning payments operation into a country with a 50% annual inflation rate and 45 million people seems like a decent product-market fit, commented Lynn Alden, an economist, on Twitter. In related news, the Wall Street Journal published a piece on how citizens of Turkey are turning to Bitcoin and Tether in lieu of the Turkish lira. Notably, Ezra Alpay, the chief marketing officer at the Turkish crypto exchange Bitlo, told the Wall Street Journal, "The Turkish lira's volatility and rising inflation seen in recent months has led our investors to see cryptocurrency as a profitable investment in the long term and as a hedge against inflation in the short term." The Wall Street Journal notes that the lira is down 40% against the US dollar since September, which has led to crypto trading volumes in the lira jumping to $1.8 billion per day, despite the country banning cryptocurrencies last year. Paradigm and Citadel Securities make an odd couple. Citadel Securities made headlines on Monday by taking $1.15 billion in capital from 2 venture firms, Paradigm and Sequoia. The deal values the market maker at approximately $22 billion. Citadel Securities is massive. According to its website, the firm handles 27% of equities trading volume on the U.S. stock market each day and executes 37% of U.S.-listed retail volume. Because Robinhood makes a lot of money from Citadel in exchange for data on its users' trades, when Robinhood halted purchases of Gamestop stock in early 2021, rumors swirled that Robinhood was acquiescing to a request from Citadel. However, the actual reason was because Robinhood did not have enough collateral for the compliance demands from the GameStop mania. The move to take money from Paradigm, which backs quite a few crypto powerhouses like Compound, Cosmos, Sky Mavis, and Uniswap, is an interesting move by Citadel Securities because back in September, founder Ken Griffin said the company did not trade in crypto due to regulatory uncertainty. However, based on comments from Paradigm co-founder Matt Huang in the press release, it sounds like Citadel will be moving into crypto. We look forward to partnering with the Citadel Securities team as they extend their technology and expertise to even more markets and asset classes, including crypto, wrote Huang. Coinbase enters the derivatives game. On Wednesday, crypto exchange Coinbase announced the acquisition of FairX, a US-based CFTC-regulated derivatives exchange. The purchase could soon allow Coinbase to offer regulated derivatives products to their US customers. The press release noted, the development of a transparent derivatives market is a critical inflection point for any asset class, and we believe it will unlock further participation in the crypto economy for retail and institutional investors alike. Other crypto exchanges have made similar acquisitions. FTX US acquired LedgerX in August, which is also a CFTC-regulated derivatives exchange. Crypto.com, Disclosure, a sponsor of my podcasts, is also in the derivatives game after purchasing Nadex in December. Data from CoinMarketCap shows that Binance did $53.4 trillion in derivatives trading volume in the 24 hours Eastern Time spanning Wednesday. Spot volume during the same stretch on Binance was only $17.3 million. Gary Gensler avoids answering whether ETH is a security. On Monday, during a CNBC interview, Securities and Exchange Commission Chair Gary Gensler was asked whether Ethereum is a security or not. Gensler responded carefully, saying, "We don't get involved in these types of public forums talking about any one project, one possible circumstance, or give legal advice over the airways that way." However, he then added, in a somewhat ominous tone for ETH holders, that if you're raising money from the public and the public is in anticipation of profit, based upon that promoter sponsor that group's efforts, that's within the securities laws. In 2018, Bill Hinman, the SEC Director of Corporation Finance, said in a speech, "Putting aside the fundraising that accompanied the creation of Ether, based on my understanding of the present state of Ether, the Ethereum network, and its decentralized structure, current offers and sales of Ether are not securities transactions." However, this is not quite the same as an official position by the SEC. Visa and ConsenSys want to bring CBDCs to TradFi. Visa is partnering with Ethereum infrastructure firm ConsenSys to help traditional financial companies integrate central bank digital currencies. Explained Visa's head of CBDC, Catherine Gu, in a press release, "If successful, CBDC could expand access to financial services and make government disbursements more efficient, targeted, and secure. That's an attractive proposition for policymakers." The partnership could see Visa issue CBDC-linked payment cards using ConsenSys' Quorum blockchain. In related news, PayPal confirmed reports that it is exploring a US dollar-backed stablecoin solution of its own. "We are exploring a stablecoin. If and when we seek to move forward, we will, of course, work closely with relevant regulators," PayPal's Jose Fernandez de Ponte told Bloomberg. Ethereum's largest L2 went down for 10 hours. Arbitrum, the largest Ethereum Layer 2 solution by total value locked, went down for nearly 10 hours on Sunday. Offchain Labs, the developer behind Arbitrum, says a hardware issue that led to sequencer downtime was the outage's root cause. A sequencer is a node with special ordering powers that allow transactions on the chain to be finalized more quickly. For now, Offchain has control over the lone Arbitrum sequencer. The team says it is looking into decentralizing sequencer control in light of this event. According to Arbitrum's Twitter account, no funds were lost due to network downtime. PoolTogether sued by a former Elizabeth Warren presidential campaign staffer. Joseph Kent, a software engineer and former tech lead for Elizabeth Warren's 2020 presidential campaign, has filed a lawsuit in New York federal courts against PoolTogether, a DeFi lottery protocol. Kent says he deposited $10 into PoolTogether in October and argues that PoolTogether does not qualify to give out lottery tickets under U.S. law. Notably, anyone who purchases an illegal lottery ticket under New York law is allowed to bring a class action lawsuit on behalf of themselves and other ticket holders, which could lead to $244 million in damages, according to the Wall Street Journal. In essence, the suit questions whether PoolTogether is autonomous and self-governed. However, in the journal, PoolTogether lawyer Kevin Bruegel claimed that PoolTogether simply owns the front end, with information on how to use the protocol, and that the operations are governed by the original code, which Pool token holders now control. As the article states, quote, according to legal experts, Mr. Kent's lawsuit could be among the first to squarely address the question of who is legally accountable when a DeFi application, known as a protocol, is at odds with the law or causes actionable harm to a user. Time for fun bits. Cryptoland is a meme. Do you want to be part of the world's first physical crypto island? Asks a male narrator to begin an 18-minute, 35-second video promoting Cryptoland. After watching the full video, which is a cross between a metaverse hellscape and a cheesy infomercial, I personally would say the answer is no. The idea is bold and familiar if you have kept up with NFTs and DAOs recently. Cryptoland is attempting to purchase an island in Fiji through the sale of NFTs. After that, the details get sketchy. For one, it appears the island's acreage is smaller than the amount offered in the NFT sale. More humorously, basic questions such as, how would the island get plumbing, were not particularly well covered. All right, thanks so much for joining us today. To learn more about OffTub and the recent NFT news discussed in today's show, check out the show notes for this episode. Unchained is produced by me, Laura Shin, with help from Anthony Yoon, Daniel Nuss, Mark Murdoch, Shashank, and CLK Transcription. Thanks for listening.